Welcome back to Success with Steven. My name is Steven Smith. On this channel, we discuss all things financial literacy. Today, we're talking about something that rarely gets covered. We're going to completely break down how to read your Experian business credit report, and we're going to do this from top to bottom. And this isn't just going to be some surface level tips, because if you don't understand how your Experian score works for business, you're basically trying to get funded while blindfolded. And there's a reason this matters more than people realize. Experian is the most important business credit bureau for funding and approvals. And yes, Dun & Bradstreet might be the biggest, but Experian is the one that's usually pulled the most. Equifax Commercial does exist as well, but when it comes to approvals from lenders, credit card companies, fintech lenders, and non-traditional funding sources, Experian is the bureau that will get pulled the most. So if your Experian credit profile is weak, confusing, or inaccurate, it can block funding opportunities without you even realizing why. But today we're going to fix that. You're going to learn how to read your Experian business credit report. You're going to learn how lenders interpret this report and how the Intelliscore works, and why utilization works completely different from personal credit, and how small mistakes can cause massive score drops. By the end of this video, you'll understand your Experian business credit profile better than most people selling business courses online. And if you appreciate videos that actually teach you how business credit works, please make sure that you subscribe and join the Success with Steven Smith family, because this channel is all about financial literacy, business strategy, and building real wealth. And without further ado, let's get right into the video. At this point, it sort of goes without saying that everyone recognizes Experian from personal credit, but not everyone is aware that Experian acts as a major business credit reporting agency as well. They collect, analyze, and report data on over 30 million US companies and evaluate creditworthiness. It provides business credit reports and scores such as the Intelliscore Plus to help lenders assess risk, monitor company credit health, mitigate fraud, and establish business credit separate from your personal credit. From the moment your business entity is created, Experian begins building a file on your company. They assign your business a business identification number, often called a BIN number, and this number functions like a fingerprint inside Experian's system. From that moment forward, your company begins developing a financial reputation, whether you realize it or not. When vendors, lenders, and creditors report payment activity to Experian, your business credit profile begins to grow, and you'll have a payment experience that's going to be added to your Experian business credit profile. An Experian business credit payment experience is a recorded, detailed history of how a business pays its suppliers, vendors, and lenders, also known as trade lines. It tracks whether payments are made early, on time, or late, and it's used to calculate risk scores such as the IntelliPlus score, and these experiences help lenders and vendors assess the likelihood of future timely payments. Every payment you make, every account that you open, every inquiry that you trigger will contribute to the story that's being written about your business. That story becomes the foundation that lenders rely on when deciding whether or not to approve your application. And this is why understanding your Experian report is not only optional, it's essential. And in order for you to get a copy of your Experian business credit report, or to update or verify information, you can head over to smallbusiness.experian.com. I'm going to link that right here, and I'll also put it in the description. Now, if you go over to that website, which we will do later in this video, you'll be able to not only get that copy, but you'll have access to a lot more information that we're going to cover. This is also where you can dispute any inaccurate information on your Experian business credit report. And later on, I'll show you that as well. But when anybody asks me how to remove, like, let's say, Experian business hard inquiries, this is the website that you use to do that. I also want to make note, this report is not free. I'll discuss pricing later, and I'll show you the plan that I have. But one of the most important things about this report is that it can be accessed an unlimited number of times in real time through a paid 24/7 monitoring service called Business Credit Advantage. And while you can view the report at any time, the underlying data is updated on a rolling basis, with new public records and trade data loaded daily, weekly, or monthly. So unlike other credit monitoring services like NAV, this isn't a snapshot that you only see once a month. It will update in real time here. Now, let's talk about why you would want to invest money into this report in the first place. Every lender asks the same fundamental questions before approving you for funding. How likely is your business to repay us? Your Experian business credit report answers that question quickly and efficiently. It provides lenders with a financial snapshot of your company, and it shows your payment habits, your credit usage, your history, and your stability. It also reveals information that many business owners never think about. Your report includes collections, liens, judgments, bankruptcies, and UCC filings, which stand for Uniform Commercial Code filing. It shows how frequently you apply for credit. It shows whether your credit profile is currently growing steadily or expanding rapidly. It also shows whether your business appears to be stable or stressed. Lenders will use this information to avoid any surprises. They want to know if you have a history of overextending yourself, and they also want to know if you have any trouble paying creditors. They want to know if your credit usage would suggest strong cash flow or, again, potential strain, and your Experian report tells a story. Lenders read that story in basically seconds. The main score summarizing that story is called the Intelliscore, and we're going to talk about that next. Now, this is something that we've covered before in my videos about building business credit, but I want to go into a little bit more detail here. The Experian Intelliscore Plus is a numerical business credit score ranging from 1 to 100 that predicts the likelihood of a business becoming seriously delinquent on payments. It helps lenders, suppliers, and partners evaluate credit risk, with higher scores indicating lower risk. It analyzes payment trends, public records, liens, judgments, bankruptcies, and company demographic data. There are at least 3 main versions, with V3 offering improved predictive performance as the recording of this video. Now, version 1 and 2 have the 1 to 100 scale. This is the traditional model. It's the one that most people recognize, with 76 to 100 indicating low risk and 1 to 25 indicating high risk. Version 3 has a 300 to 850 scale. This newer model is designed to align with consumer credit scoring, boasting up to a 36% to 50% improvement in performance, making it a better indicator at predicting risk. The scores can be generated using a commercial-only model based on business data, or a blended model incorporating personal credit data from the business owner, which is highly effective for small businesses or new businesses. The Intelliscore is extremely sensitive. It reacts quickly to change in credit behavior, but it also weighs risk factors heavily, and it updates very frequently. Experian calculates this score using 6 major categories, and these categories include the age of your business, the number of credit inquiries, collections, delinquencies, payment history, open trade lines, and credit utilization. Each category sends signals to how your business handles credit. Together, they create a picture of your company's risk level. But there is something even more important than the score itself. I see a lot of people focus on the score, but they have a misunderstanding about this system. Lenders often care more about your risk rating more than your actual score. Now, here is something that almost no one in the business credit space explains clearly. And once you understand this, the entire approval process will start to make sense. Lenders often care more about your Experian risk rating more than the actual Intelliscore number. Most business owners obsess over the score because they want to know whether or not they have a 70, an 80, or a 90. They track that number the same way people track their personal credit scores, and they assume that if the number goes up, approvals will follow, but if the number goes down, then of course the approvals would disappear. But lenders are not just looking at that number, they're looking at the risk category behind the number. Experian has archived business credit reports going back years, sometimes even decades. They have tracked how thousands upon thousands of businesses behaved over time. They know which patterns tend to lead to success, and they know which patterns tend to lead to delinquency or default. When a lender pulls your Experian report, they are not simply looking at your current behavior, they are comparing your profile to the profiles of businesses that came before you. They are asking whether your company looks more like the businesses that repaid their debt or the ones that struggled. And this is what predictive modeling means. Your business is being evaluated against real-world outcomes. And this is why approvals can sometimes feel confusing, right? A business might have a moderate score and still receive approvals because its overall risk profile looks stable, while another business might have a decent score but still be denied because certain risk signals will resemble companies that have defaulted in the past. That's also the reason why there are certain business types that just are more risky than others, not because your business can't make money, but because essentially in the industry industry, these tend to fail. Understanding this distinction will change the way that you think about business credit. You stop chasing numbers and you start managing risk signals. Now, with all of that said, let's take a look at the model validation odds chart. And let's start at the green column. This is your risk score range, and it ranges from 1 to 5, with 5 being the lowest risk and 1 being the highest. I know that sounds backwards, but again, 5 being the lowest risk, 1 being the highest. The yellow column shows how many accounts this business has. In this example, we're looking at 5 different scenarios where each company had 20 accounts. The goal is to see how many of those accounts became delinquent. Now, at the top row, the risk score is a 5, which represents low risk. Out of the 20 accounts in that category, only 1 went bad, and that resulted in a 5% bad rate. Now, compare that to the lowest score on the chart. A score of 1 represents high risk. So in this case, 8 out of the 20 accounts went bad, which equals a 40% bad rate. Clearly, that's a much worse outcome. This chart shows the bad rate associated with each score. By understanding the risk level tied to your portfolio score, lenders can estimate the likelihood that new accounts may go delinquent in the future. And just to be clear, this visual comes directly from Experian. This is actually how Experian presents this data to lenders when they purchase a business report. You can actually look this up on YouTube or type into Google Experian model validation odds chart, and this will come up in a video, so that's where I got the information from. Now, this screenshot is the full odds chart, and now we're adding something called the KS value. Now, KS simply represents the maximum difference between the percentage of good accounts and the percentage of bad accounts. If we compare the top and the bottom of the chart, you might expect the lowest score to have the highest KS value, but that's not actually the case. The second column has the highest KS score. So when you look at the numbers, it shows 70% minus 33%, which equals 37, and that 37 is the KS. Again, this number is based on the largest gap between the percentage of good accounts and the percentage of bad accounts. So when you pull your first Experian business credit report, it's called the Experian Business Credit Advantage Report. And that name comes from their Business Credit Advantage Monitoring Program. On this report, you'll see all of your payment trade lines. Some of these are external trade lines that get reported to Experian through financial data exchanges. So in simple terms, they come from financial exchange partners that share commercial credit card data with Experian. Now, this is exactly why Experian is often considered credit card companies' favorite bureau. Even if a credit card does not directly report to Experian, your payment activity can still be shared through these exchanges. And this information typically comes from sources like the Small Business Financial Exchange, the SBFE, Credit Safe, and other financial data partners. The report also shows aged trade lines, and these are accounts that are no longer active. So if a trade line hasn't reported activity or payment data for more than 6 months, Experian marks it as inactive and it's moved into this section. Now, I don't have this section right here in our example, but I think I put it in the next one, so you'll be able to see it there and when we look at my report. Now, next, you'll see business credit inquiries from the last 9 months, and normally you'd see this with payment trends that compare your business to other businesses in the same industry. And again, I may have cut that information off. You'll also find your UCC filings, which again are your Uniform Commercial Code records. We discussed that earlier. And finally, the report includes any public record data like tax liens, filings, or anything that exists. Now, let's talk about revolving debt and how it appears on your Experian business credit report and how it affects your Intelliscore. One of the most important things to remember is that most business credit cards report to Experian, and the higher your utilization, the lower your score will be. But here's the big difference. Business credit utilization is calculated very differently from personal credit. On the personal side of your credit report, your approved credit limit is what gets reported to the credit bureaus, and it'll show your balance, and then you're compared against that to determine utilization. So for example, if you have a $30,000 personal credit card and you carry a balance of $15,000, your report will show a $30,000 limit, a $15,000 balance, which would equal a 50% utilization because you're using half the limit. Business credit doesn't work that way. With Experian Business Credit, the highest amount you've ever used, that becomes your reported limit. Your business is essentially scored based on how you pay and what you spend, not what you don't spend. So in this example, the recent high is $85,800, which means that was spent by this business. Let me give you a hypothetical example. Imagine that you get approved for a $30,000 credit card, and this is a business credit card. During your first billing cycle, you spend $15,000 and then you make a $2,000 payment. On your personal credit report, you would expect, $30,000 limit, and it's going to show a balance of $13,000 because I paid $2,000. That's not how it's going to work on Experian Business. Instead, Experian will show your credit limit as $15,000, not $30,000, because this was the highest amount you ever used. After your payment, your balance would then show $13,000, which would equal a 87% utilization. Once you pay the full $15,000, your utilization drops and your score can improve significantly. So the funny thing about business credit is your score really will fluctuate depending on how you spend, and that's completely normal. You would expect your score to have high drops. Now, let's say you later spend $25,000. Then $25,000 will become your new reported credit limit, and utilization will be calculated based on whatever balance remains at the time. So the key takeaway is to always remember that your business credit profile is built around your highest usage, and your score is heavily influenced by how you manage and pay down what you actually spend. So now I'm going to show you the different credit monitoring products that Experian offers, and technically there's really just one main option. And this is, of course, at the time of recording because the prices might change. So you'll see 4 different plans, and I'm going to simplify them so you can understand these a lot easier. If you only want to see your Experian Intelliscore with a quick summary and you don't want the full details, you can pay $39.95 per report. Now, if you want the detailed credit report that includes all trade lines, business information, and a full credit history, you pay $10 more, which will come out to $49.95. There's also the Profile Plus report, but I'm going to skip that because personally, I don't see much value in it, especially when we talk about this next one, which is the one that I recommend. Now, the option that stands out that has the best value is $199 per year, and you get ongoing access to a live, full, detailed credit report. This is the service that I recommend, and think about it this way. You pay $199 one time for the next 12 months, and you can pull a fresh copy of your Experian Business Credit Report any day of the week. Now, this is the Business Credit Advantage report, and then I'm going to actually show you what that looks like for me. Now, before I show you my report, because a lot of information will of course have to be blurred, I want to show you this sample. So for this sample report, we're looking at LaSalle Medical. And on the report, you have the company address, you have the company phone number, we have the company BIN. Remember, you're going to receive that as well. You also have family linkage. So you have the parent company or the headquarters or any subsidiaries and branches, as well as some alternative locations. You also have the key personnel like the CEO, like the treasurer. You also have the SIC code and the NACE code, which will be your business type. This can be updated online. You also have the type of business entity that you're looking at, as well as having the date this file was established, which would be 1977 in January. So this business has been operating for 41 years. That is a, very, very long time. It has 100 employees. You can see the sales here. And then the filing data was provided by, you have your state, and of course the exact date of incorporation. Now, in most scenarios, what you'll hear from most people is that, wow, they're at a 60, that would be like a medium risk level. That's not good. You would want to be, of course, above 76. However, from what we just discussed, I've seen where even for me personally, I've had my score drop to like 20, 25, like 15, and I still got approvals because it was not so much important that this score was at a 76 or above. It was more important that my financial stability risk rating was actually low. So in most situations, I will tell you that your financial stability risk rating will outweigh whatever your business credit score is in most instances. And then here are some of the key factors that are making up this score. So the number of commercial accounts with terms other than net 30, 1 through 30 days, number of commercial accounts that are not current, number of commercial accounts with high utilization, and length of time on Experian's file, which age does play a very big factor when it comes to your business score. But of course, if you have a new business and you're trying to get some business credit cards, I wouldn't harp too much on that. I mean, that's going to be okay. As you use them, then age will become a higher determining factor. Next, we have our credit summary right here. So you can see current days beyond terms right there, DBT. So days beyond terms, or DBT, is the average number of days a firm pays its bills past the invoice due date. And the color of the predicted DBT is based upon observation, or based on observed norms rather, of all US businesses. So green for all entries 15 days or less. If it's yellow for all entries between 16 and 50 days, orange for all entries would be between 51 and 90 days. Red for all entries is beyond 90 days. And then note, the DBT norm for all industries is 7 days. So that kind of already lets you know that for a industry standard, you need to pay within at least 7 days of that due date, right? And then here we only have, looks like one account for this current days beyond terms, and then predicted DBT. This is the prediction. It's a forecast of the DBT for 60 days into the future, and it's based on the trend in DBT for your industry type. So this is why, depending on what type of business that you have, you can already be flagged as high risk without having to really do anything whatsoever, because you're always going to be based off the trend of your industry. And that includes derogatory public record information, collection accounts, number of inquiries, years in business, how long you've been on file, and other factors. Now, if we scroll down here, the average industry DBT, it shows it as 3. Then we have the payment trend indicator. It is stable. It's showing the lowest balance in the last 6 months, the highest balance, the current total account balance, and the highest credit amount that has been extended, as well as the median credit amount extended. Then for the payment trade lines, you can actually see that here. A trade line is a reported line of credit from your supplier, your accounts, and a trade line is sometimes referred to as a commercial account. They have 66, but they also have 6 UCC filings. And if we click on the chart, it actually shows the payment trend summary for these accounts. Like, you see the dates, you see what the balances were, you see what the utilization was, you see the DBT, right? Up to 30 days. 31 to 60. Notice they never got within that range, or 90. And then you can see that's the monthly payment trend. You also have the quarterly payment trend and recent activity. Then you have the business scoring worst, which is 59%. There are no bankruptcies. There is 1 lien. There are 2 judgments filed, and there are also 3 collections. So if we keep scrolling down, let's take a look at what we have here. Our 3 collections: Acme Collections, Vinny Collection Services, things like that. There's the close date, there's the amount that was disputed, and the amount that was collected. Now, if you scroll all the way down here, you'll see the commercial banking, insurance, and leasing. Not every business will have this. You may not see that. And for this summary and for this sample, this is pretty much all the information that we can pull from it. So now let's take a look at a real example. I'll go to my account and we'll look at my business. So currently we are on smallbusiness.experian.com. If you want to log in, you'll click on sign in at the very top, and then you'll enter your email and your password. You would have created this when you paid for the Business Advantage plan. Now, currently I'm logged in. It says right here that the score was updated on February the 2nd. So this is just a snapshot, but we're going to actually go inside of the report and see if anything has changed here. So I'm going to have to block out a lot of this information because that's my personal business information. But you can see the last time that I had actually renewed this plan. So it was April 4th of 2025. So it's coming back up again, the plan type that I have. And let's actually go to view latest report. So again, for the business, you'll see, and I may block this information out, of course, but I have the address, phone number, website, my Experian BIN number. I have my SIC code, my NACE codes, how long I've actually been in business. So you can see I started this 2 years ago, just about 2 years. And I have 3 employees. Sales are unknown, but I can always update this information if I want to use my tax information from the previous year. Now, my score right here is 85. It's showing low risk. The average benchmark score for other businesses in my industry is 32. Now, if you look at this, the key score factors here are my number of recent active commercial accounts, the length of time on Experian's file, the number of commercial accounts other than terms net 1 through 30 days, and the ratio of the total balance to total high balance across all commercial accounts. And this is the one that's the most important to me. It's my Experian Financial Stability Risk Rating. As you can see here, it's a 1, so that is fairly good. It shows that my business is stable, at least against other businesses of a similar type in my industry. Now, one of the most important things that I want to actually show is if you scroll down to the very bottom, you can submit data dispute here. This is where you would dispute any information that you don't want on your Experian business credit profile. So you can go to business type if that's wrong, business facts, family or linkage, the UCC filings, collections, inquiries, things like that. You can add that information here and you can have them updated. Now, I've had inquiries removed for several things on here. Now, again, my experience with this has been like, okay. In the past, it was really quick. It was really easy. I haven't used it as of late. I normally don't really do anything on this business. I keep this report fairly clean and very stable. I also have 2 other businesses, but the reports aren't as old as this one. So this is my business where it has a decent age. Everything is stable. Payment experiences are very, very steady. I like this one, and it's a very, very good industry. If you guys are going to ask me like for the SIC code, the NACE code, it's media. So it's like internet publishing, all that kind of stuff. It's media. It's what this is. So pretty stable, pretty safe, because of course there's a lot of low overhead costs. This isn't a very heavy spend type of industry, at least not for what I'm doing. Now, one of the most important things that I want to show you is this section right here, score improvement tips. Now, right here, it actually shows you all the things that I can do to improve my score. So if you ever see this, just read that. That will tell you exactly why you may have a higher risk rating, a lower Intelliscore. All the information is going to be right here. Now, I want to show you one more thing so you can use this tool to actually get a very stable score for your risk rating and actually get a pretty good Intelliscore at the same time. And you would scroll back up and you would click on Business Score Planner. Now, Business Score Planner, it's going to ask you a couple of questions, but normally I skip this one. There's an advanced model, but let's just say that I've been in business 1 to 2 years. How many lines of business credit cards, loans have you had in the past 9 months? Let's just say I had 1. How many new lines of business credit? Let's say I had 0. If you have any lines of business credit sent to collection, none. Paid on time. How many lines of business credit cards or loans have you used? Let's just say 1. And then for my percentage, let's say less than 10%. How many business? Let's just continue, because this is what I wanted to actually get to, the interactive portion. All right. You can actually find this just by looking it up on Google. But if you want to know how you can actually get a higher Intelliscore, which will most likely in turn affect your risk rating, is to play with this. So for example, the years you've been in business, if you change it, it actually will show how high or low this score goes. So notice, the longer you're in business, the higher this score will actually be. Now let's drop it back down to where you're at like 0 to 1 years. Now, isn't it funny that in this time frame, it actually is higher than when I was at my like 2-year time frame? But anyway, as you stay in business longer, you will see higher values. Now, let's say that I'm in business for 1 to 2 years, and then inquiries, I've actually had 0 in the past few months. I really haven't been using, again, I don't use that to really do much, so I don't have any inquiries. Collection accounts, let's see, I have 0. Average payment history, let's say, I think I was in like 1 to 15 because I still have some active accounts. I have to go back. No, actually, I don't. Okay, so that would be 0. Open lines of business credit, definitely 3 or more. And then credit used, let's say it was probably like 10%. So that would give me a 75, like to estimate what my actual Intelliscore would be. And then there's also common scenarios that you can look at, which would show you what your score would be, or you can do the advanced one where it gets a little more specific, and depending on what you put in here will determine exactly what this score would be. But again, the most important thing that you need to understand is your risk rating. I want to thank you guys so much for watching this video. Let me know in the comments if you enjoyed this breakdown of your Experian business credit report. If there are any other topics that you'd like me to cover, I'm always open to feedback. Please drop those ideas in the comments. I definitely check those. I try to respond to every comment, and share this video with someone who you think could benefit from this information, especially if they're new to business credit or just need more information. And as always, thank you guys so much for watching this video. I truly appreciate it, and you have a wonderful day.